we can 10 times, 100 times elements of the Bitcoin economy?
Well, I think that it starts by rotating from one narrative, which is, well, Bitcoin is a very interesting uncorrelated digital asset with high volatility, with high potential returns, and you can put 1 to 2% of your portfolio into it with or without leverage. But that's one. That was a narrative, and the speculative narrative was predominant before March. But that's not going to appeal to 99% of the investors or the money in the world. They want something different. They want Bitcoin is the ultimate synthetic long-term treasury reserve asset. It's an engineered safe haven asset, engineered to be superior to gold in all aspects of a bearer instrument that's a store of value. And if I go from one to the other, then I'm not talking about getting 1% of the money from 1% of the investors. I'm talking about getting 50% of the money from 100% of the investors. Okay, so what does that mean? Well, I mean, it means that the people that we want to appeal to are the people that put their money in gold because they don't trust fiat instruments. So there's $10 trillion there. So they'll be looking at, how does Bitcoin compare to gold? How does Bitcoin's volatility compare to gold, returns compared to gold, trading liquidity compared to gold, et cetera? How many people hold Bitcoin versus people that hold gold? I think the second big, by the way, and that's $10 trillion, right? So that gets you a factor of 20 to 50 there. The second bucket is people with bonds, $17 trillion of negative yielding debt, $100 trillion of 0 to 3% yielding debt. Why are you putting money in bonds, sovereign wealth? It's a safe haven. So people's reaction is the market gets scary, they run to a safe haven. I think it's pretty important in the crypto industry, and with regard to Bitcoin, you position Bitcoin as the ultimate long duration safe haven asset, so they run to it instead of running to sovereign debt. Mm-hmm. That gets you, again, another factor of 10, 20, 30. And then finally, you've got a pool of big tech investors. You could argue a lot of people are using big tech like Tesla, Apple, Amazon as a store of value. They've lost faith in the currency. They know they can't invest in negative yielding bonds. They're not quite sure about gold. I mean, gold is defective. It's an antiquated store of value. It was the best store of value for 5,000 years until we invented the computer, ZZ, right? Like, yeah. It's like the Canon camera was the best way to take photos, and we put photos in shoeboxes in our attic until we invented the iPhone. It was a good idea until it became not a good idea. Libraries were a good idea until Google gave away 1 million books for a nickel for everybody on Earth. And then it became not so good an idea. And so what you've got here is people running to these things, like they're running to big tech, they're running to gold. And I mean, I don't know why anybody would run to bonds, by the way, like sovereign debt yielding negative. I can't figure that one out, but they're all looking for a store of value. Add up those three, it's $150 trillion. Bitcoin is 350. So the only reason people wouldn't buy into the idea of a crypto asset as a treasury reserve is because they don't understand it, or they're afraid, or when they show up to the exchanges, they get confused. So I think that when I show up to exchange, if you show me Bitcoin versus gold versus sovereign debt versus big tech, and Bitcoin volatility versus Apple volatility. By the way, everybody says Bitcoin's too volatile. Apple's been more volatile than Bitcoin for the last 90 days. If they saw Bitcoin versus Tesla volatility, Bitcoin volatility, Tesla's more volatile than Bitcoin. And so when they see this compared to big tech, to debt, and to gold, then you're telling them you can trade the one for the other. When they see Bitcoin compared to Tron, EOS, Chainlink, and 37 currency pairs, you're telling them they can trade Bitcoin versus Tron in CNY or BRL or ARS. Like, there aren't that many people with money in ARS and Tron that are going to convert it into Bitcoin. So and what you need to do is you need to frame the investment hypothesis for people, because anybody that sees gold, debt, or Tesla on the ticker is going to say, oh, well, this is a way I can buy this or I can buy that.
Right.
You're going to attract the money into the industry by looking outward to the alt assets and comparing Bitcoin to that. And then once they get into Bitcoin, you can then trade from Bitcoin into other cryptos if you're pursuing privacy, currency, stable coin, application, smart contract. All the other value propositions of the crypto industry will come through the gateway of Bitcoin. But Bitcoin is 0.1% of the ocean of investable assets. 99.9% are in the asset ocean, and we're talking about 0.1%. So we need to carve a channel between that ocean and that pond, and we need to tell people it's safe to convert your gold to Bitcoin, your low yielding debt to Bitcoin, your big tech to Bitcoin, and this is a compelling idea. I think that's how we grow the industry. That's
a really great idea. You've given us an idea, Michael. I think finding a way to show volatility of Bitcoin versus all these other assets that everyone invests in all the time is a really digestible way to demystify and debunk the fact that Bitcoin is actually not as volatile as people think. So we've got an idea there, CZ. Let's take that one and run with it.
Yeah, and I think it also sounds like we have to list gold, Tesla, and a bunch of other assets on our platform soon.
Yeah,
so I think those ideas are really good, actually. Yeah.
CZ, I spend so many hours with my eyes glued to the Binance screen. I have the Binance yellow burned into my head. I have stared at it so long because you have the liquidity minute by minute and the best trading information in the industry. And if I'm trying to read the market, I go to Binance Worldwide. But you've got the makings of the Bloomberg of this space. If you actually started to park Tesla, Amazon, Apple, gold, and bond index metrics or NASDAQ metrics or the like there, then every conventional investor that's not currently a Bitcoin or a crypto investor would be going there thinking this is cool. I'll make one more point. I give a lot of interviews and I meet a lot of people. Whenever anybody wants to impress me with their deep knowledge of investing in Bitcoin, you know what they say? They're like, well, that's very interesting, but, isn't it volatile? It's like the only thing they've learned in a decade is sometime in the last decade, it was volatile. Mm-hmm. And what I say is I've stared at it every day for the past 180 days. I have investments in 30-year U.S. sovereign bonds. Yeah. Many days they're more volatile. Yeah. I have investments in Apple. It's more volatile. I've watched the NASDAQ be more volatile some days. I've watched 10 and 30-year debt be more volatile. I've watched silver be more volatile. Nobody knocks those things. Tesla obviously is more volatile. They're the poster child of volatile. Mm-hmm. And most people don't really know how volatile it is. And if we had the rolling 30 and 90-day volatility or the rolling 12-month volatility, and it was parked as a number, then people wouldn't be, they're remembering that Mt. Gox there was some volatility back then, or 2017. And you can't compete against someone's memory of what you were when you were 13 years old or when you were a kid. And they're like, did you throw a temper tantrum when you were in junior high school? I'm like, well, I'm like 28 years old now. Why are you holding that against me? And the answer is because we don't put it in front of their face. And if people were just saying, yeah, Bitcoin is 82% as volatile as Apple this month, everybody would go, oh, wow.
Yeah. Completely shift the narrative. Yeah.
Right in your tracks. Just stop.
Yeah. Well, so on picking up on one thing that you've said there, Michael, gold. I'd be probably remiss not to talk about gold for at least a minute or two. Bitcoin, digital gold, that's been the narrative. Some people say that's generous. Some people say that's not doing a service at all to Bitcoin. I remember you saying that Bitcoin was, I think it was 1 million times better than gold. That's a bold claim. So do you believe that it's already replacing gold? And if so, why?
It is 1 million times better than gold. And it's 1 million times better than gold because of two ideas. One, it is engineered virtual gold, which means it is all the virtues of gold, none of the liabilities of gold, right? It's not centralized. It has no mass. It moves at the speed of light. It's absolutely capped. If God designed virtual gold in cyberspace, he would have designed Bitcoin. Okay.
Yeah. Absolutely.
People that know this know that God's name is Satoshi, right? So that's one reason. But the other reason is because Bitcoin isn't just a synthetic safe haven asset engineered to be superior to gold. Bitcoin is also the world's first thermodynamically sound monetary network. It is a big tech digital network. It's Facebook for money, or Google for money, or like YouTube for money, which means that it's a network engineered to host that safe haven asset. And it's an open network. So every knock on Bitcoin, like, well, maybe the transactions aren't too fast. Well, I watch Binance. They're pretty fast on Binance. You plug into Bitcoin, and a lot of people's view of Bitcoin is how fast Binance moves. And so if you want it to be a payment network, you plug Square or PayPal into it, and it gets better. If you want it to be a trading network or a finance company, you plug Binance into it, it gets better. If you want it to be an institutional offering, you plug Grayscale or NYDIG into it, it gets better. It's an open, you want it to be more secure. You've got your cold storage hardware wallets on one extreme. You want it to be easier. Eventually it's going to get built into Apple Pay and Google Pay. Why? Because Apple Pay and Google are going to have to respond to Square and PayPal. Why? Yep. Because politicians destroyed the savings account. And if I take Square Cash application without Bitcoin, it's a free checking account and I can move money around. But when I take Square Cash application and I plug in Bitcoin, it's a free checking account with a savings account that's been yielding 100% interest tax-free over the past decade every year. So do you want a savings account that yields 100% interest if you're PayPal or Square? Yeah. Do 7.8 billion people want it? Yeah. Can Apple and Google and Facebook afford to not offer a savings account in cyberspace that yields 100% more than the next bank? This is not about a little trinket, right? This is about the bank gives you 0 interest and your money is worth half as much in 36 months, or it's going up and doubling every year. Yeah. So why is Bitcoin 1 million times better than gold? Because you can engineer it into a mobile app, into an exchange, into any piece of software, and it's on an open protocol. So that idea of an open monetary network where virtual gold moves at the speed of light and eventually finds its way into Amazon and Google and Facebook and Apple and Square and then there's this little war, right? Like Square's going to beat PayPal, so they need one more button, and Apple's going to put in one more button, and who's going to win? The market, right? You guys know it's a very brutal market in exchanges, right? It's what's the next feature you're going to add? Nobody is going to engineer another feature into gold. Right? Mm-hmm. Gold is going to be the same thing it has been. The last innovation was like a London good delivery bar with 400 ounces stamped or whatever. Yeah. And okay, that's your best innovation. How do you engineer better? And the point is you can't any more than you can improve Polaroid pictures in a shoebox in your attic. You can't make it better.
Yeah, I think Michael said something that's really, really interesting there. I think what Michael described there is partially what Binance Card does today, which allows you to spend crypto directly from your crypto savings account, and it actually works with Google Pay and Apple Pay, but not in all locations now. So we will definitely absolutely work on to increase the coverage of that. But there's something else that, Michael, you mentioned that's really interesting. I want to pick your brain a little bit, which is you mentioned pension funds and sovereign funds, right? So now we have individuals investing in crypto, public companies now investing in crypto. When do you think the pension funds and sovereign funds are gonna jump in, and what process is gonna require them to come into to this? Because eventually they will have to abandon ship and hold some Bitcoin, right?
I wouldn't be surprised if we don't start to read about pension funds and sovereign wealth funds investing in Bitcoin next year and in the next 12 months.
Yeah.
Look, this is God's gift, right? This is the perfect instrument for someone that needs long duration. So when I look at anything, I look out 100 years, CZ, and then I look out 30 years, I look out 10 years, you know, and if you need to leave wealth to your grandchildren in 30 years, how are you going to do it? And if you needed to leave it to your great grandchildren in 100 years, how are you going to do it? And you cycle through and you're like, well, real estate is going to get taxed away, and maybe the regime will fail and you can't carry your real estate from one place to another place. Companies are getting taxed on income tax, employment tax, tariffs, etc., and they've got corporate risk and they've got massive competition. You can't be sure any company will be in 100 years.
Yeah.
You know, then you've got bonds. Well, every bond is, unless it's growing faster than the money supply, it's diluting. So you're going to lose most of your bond. Then you've got gold, and you know, gold miners are going to print it, you know, 2-3% a year, and then it's corruptible, and you can counterfeit it. And you know, they're derivatives, and they're not backed one for one. They're fractional derivatives. So you're on this mad dash. How do I find something that I can hold forever? Mm-hmm. And a lot of times, you know, individuals that are trading, they're thinking forever is 30 days, right? Like 3 days, you know, like 3 months, 3 years. Like, no, who thinks past 3 years? Well, pension funds by charter, they have to think 30 years.
Yeah.
They have to think 50 years. They have to think, you know, 100 years, a durable thing. So find me the best long duration store of value in the world. And the answer is every single monetary network, the fiat networks, bond networks, stock networks, real estate networks, they're not closed systems. You can create more of them, which means that they have a leak. They bleed energy 2% a year, 3% a year, 1% a year, 7% a year. Well, Bitcoin is the one thing that's a closed system. You can't create more than 21 million coins. You might slightly decrease the amount, but they're never going to be more than that.
Yeah.
And the definition of a closed system is you can't put mass in. All you can do is put energy in. Mm-hmm. And energy is monetary energy, right? It's money. So as monetary energy flows into Bitcoin, it sits like in the network, like a monetary battery. This is a battery that will hold a charge for 100 years. That's the big idea. The institutions are just now starting to wake up to this idea that if you put your energy into a real electric battery, it drains 2% a month. You're going to lose 24% of your electricity in a year. You put it into a gold battery, you lose 3% a year. You put it into Bitcoin, you're not losing any energy. That makes it so superior for every pension fund, everyone looking for long duration, that once that message gets out, they're going to stampede to it. It just is a matter of education and them getting comfortable and then solving all the on-ramp issues, you know, and making it easy for them.
That's our job, yeah.
Yeah, education. Well, we do a lot of it and we want to do more of it, I think, but we need all of these really compelling narratives and bringing them to as many people as possible. And on that topic, CZ, you've talked a lot about how Bitcoin can act as an ideal hedge against devaluing currencies. This is becoming even more topical during this really strange 2020 COVID year that we've all been in. Has your view changed, or has your view reinforced based on what you've seen government action throughout 2020?
Oh yeah, I mean, my view is definitely reinforced. So yeah, I think basically I've come to this view a couple of years ago, and then what's happening in 2020 is just eyes opening. Like, I didn't think it would happen this fast, but having COVID, having the pandemic, economic shutdowns, and then government printing money like crazy really demonstrated that this concept of some money, right? So Bitcoin is deflationary. People lose it here and there, so it doesn't increase. It slowly decreases over time. Mm-hmm. And then and then like early this year in March or in April, people says, why did Bitcoin drop together with traditional fiat instruments, stocks? And people are questioning, is it a store of value or not? But now look, it's very clear, right? It is a very good store of value. And so I think, I think what's really interesting is Michael does have the long-term vision, the long-term mindset, whereas people who are trading actively, they have a very short mindset. And when you look at things on a shorter horizon, yes, it is volatile, maybe less volatile than Tesla or even Apple, but it is still very relatively volatile in the on the short time frames. But when you look at a longer time frame, Bitcoin has just jumped like a few times in history, and I think will continue to jump in the long run. So yeah, all of my views are super strongly reinforced this year. So I don't have any fiat, so I couldn't buy Bitcoin. I couldn't buy more cryptocurrency. So my assets are already all crypto. But yeah, I'm not.
Brilliant.
I don't even think about selling in terms of selling it anymore. It's just it's asset I hold. It's asset I spend when I need to spend it. I swipe my Binance card or whatever, and I'm this is the asset I hold. I'm using it to buy stuff. I'm not selling this stuff into fiat. Like, why would I do that?
Right.
So so that's kind of my view. I think which is very much in line with what Michael tweeted a few days ago.
Gotcha.
I think he tweeted that